is on the investor journey from Bitcoin to venture capital. Our moderator for this session is Eric van der Kleij, CEO of the Center for Digital Revolution. Eric, welcome to the ICO Summit. You will discuss with Richard Muirhead, may I ask you to come on stage, General Partner, Open Ocean, Olga Feldmeier, CEO of SMART VALOR, and Charles Hoskinson, CEO, Input Output. Thank you for being here and enjoy your panel.
Am I on? Have I got it?
Thank you.
Thank you, Sunny.
Here.
Please have a seat, everybody, in the right order,
around.
with the exception of me. I'm going to be over here. Figure out where
Okay.
you should be. As I've explained in the past, I do weddings, funerals, bar mitzvahs, I do all of that. Firstly, well done for making it through lunch and being back here. My name is Eric van der Kleij, and they've foolishly asked me to moderate this panel. So the panelists think they know the questions I'm going to ask. But actually, before I go into that, I just want to say full kudos to SMART VALOR, Olga, and the team at SMART VALOR for putting this on. This is your first one of these, but boy, you nailed it, which is awesome.
Thank you.
Okay, so now to the topic. Starting with someone who, I won't say how long we've known each other, Richard, because it would be giving away a little too much. But the last dot-com boom and bust does come to mind. And so you've got a good viewpoint about investing across that time period. And so actually, when you think about the timeline, you know, of the transition of an investor, starting from 20 years ago, say, to today, what does it look like? And especially with a view on risk, and how have you seen it evolve? So maybe start with the first time you either took or made an investment right the way through to now.
Gosh, so that was back in 1995, and so I was 23 at the time, and I was building a company with my brother Charlie. So we were trying to build some piece of the internet as it was being constructed then, and we built a service activation software for networks made of routers, as they used to call them in America. And it was an incredible experience, obviously, at that age, and it gives me a lot of respect and indeed attraction towards entrepreneurs who have that particular vintage. And we got the opportunity to be involved in the IETF, the Internet Engineering Task Force at the time, and tried to participate a little bit in the setting of the standards around quality of service and security, and sort of saw firsthand that process, saw the involvement of big companies like Cisco and Intel and so forth. So that was the experience, and we ended up having, actually, to bring you the punchline for that company, we IPO'd in June 2000 and reached at the end of 2000 a $1.4 billion market cap.
Can you just say that was the IPO?
Yes, that was an IPO.
Worth saying.
And that, I must say, was predominantly on the back of a great story, a rising tide, a product that was being bought by the major carriers and telecom service providers, and great revenue growth. But I would have said that the pretty kind of eye-watering multiples on the revenue to market cap. But and I'll finish with that bit, that in relation to ICOs, I actually tried to stop us doing that IPO at the time. I felt that there was a more methodical approach to building the company that actually, you had to deal with the coding and the product and the value proposition and the cultures of the company and so forth. And it is possible to get way ahead of yourselves and think that it's just about doing a quick share swap and growing that way. So that can be dangerous. I think it's one to watch out for. But going back to your question, it was extremely hard. We took money from individual angels who were predominantly, so we took money from Herman Hauser, who's pretty famous through Amadeus now and in the UK scene. But he was a real exception to the rule. And then we took money from Esther Dyson in the States. But other than that, the venture capital scene in Europe was still thinking about risk management and minimization rather than thinking about risk maximization, which is where it has got to now.
Oh, we are so going to come back to risk maximization because I feel that we're perfecting that in some ways with the ICO boom. But we'll come back to that. Olga, can I just say that I loved your presentation and the timeline. It was a really great piece of work.
All the exercise.
Yeah, that's right. It was nice to do something like that. But tell us a bit more about that, because it is the history of investing that I think that's quite interesting to you, especially from, say, a Swiss context.
Well, history of investing would be too long to cover in 30 minutes. What I'm particularly excited about is what's going on now. I remember, when was it, like 2015? Wow, just 2 years ago. I was sitting, with Vences Cazares, founder of Xapo. We were sitting here in banking offices, family offices, and we were pitching Bitcoin. Why people should invest in Bitcoin. Yeah. And they were kind of polite. They were looking at us and there were no questions, no reaction. It was like completely dead and polite, right? And look what happened in 2 years, right?
Are any of those investors in the room today?
Everybody. Yeah, I don't know. How many people you guys invested in Bitcoin?
Oh, sheepish, but awesome. Yeah, quite a few.
It's majority.
Yeah.
And it used to be like one hand or two hands. So the investor journey, from being like something crazy and, who is investing in something, some code, right?
Yeah.
So that's amazing evolution.
And the evolution is, of course, continuing. And we can't go. I mean, you briefly mentioned it in your talk about the work that you did with Xapo and FINMA, but I can't let it go by because that's a huge building block for Switzerland in that it means that anyone that goes to meet FINMA now, they're going to know what a token is and they understand and actually are developing their capacity in it. So that was important work in the industry. But then let's fast forward to now, right? And Charles, we met at level 39, right? That was probably the first time that we met. So let me ask you, I don't know, the question that you probably wouldn't expect is Ethereum the right weapon of choice?
So for those of you who don't know me, I'm one of the co-founders of Ethereum. And actually, I was the guy who drew the short end of the stick. So I had to fly out and live with Mihai and Zug back in 2014. And we were the very first people to actually talk about cryptocurrencies. We were MME Partners' first cryptocurrency client. Now I think it's all they do. So anyway, is Ethereum the right platform? So the way I think of that question is, let's look at an analogy. So let's look at the internet. Where do we start? We started with TCP/IP. So that's kind of like a standard for moving information. So the cryptocurrency analogy is Bitcoin. That's a standard for moving value. And it proved you could do it. Then what came next? The web browser. This was the standards and the platforms. This actually allowed you to get on and do something useful with the system. That's Ethereum in a certain respect. Well, there's many competing standards there. Well, what came after the web browser? You have the Amazons, the Googles, the eBays, all of these big businesses that are consumers of that stack. So similarly, now we have this ability to represent value in a very complex way, and we're seeing ICOs and all these business models. There's tremendous innovation that's occurring. This does not necessarily need Ethereum per se. It can use pretty much any platform with equivalent capabilities.
Right.
And there's going to be tremendous competition. What matters are the standards, and what matters is how these standards are used and evolved over time.
And the current standard of ERC20 as a token, I mean, so for example, Ethereum Classic has no role in any of this?
Well, we have ERC223, and we also support ERC20, for example. But there's, many ways you can represent value. ERC20 allows you to create a token, but there's a story behind that token. There's metadata, there's attribution, there's Oracle services. There's so much complexity that's involved in doing real-life applications. Equivalently, a web browser has to have what? CSS and JavaScript and a litany of other features and capabilities.
Yeah.
So these things tend to evolve over time, and they come out of kind of a regulatory pressure, necessity of the market, and just pragmatism.
Well, then going back to, thank you for that, by the way, it's awesome. Would you mind just telling the audience what you do?
Oh, I run IOHK. So now we're a research and development firm. On the research side, we actually write white papers and do science, go through peer review. So we write consensus algorithms and zero knowledge proofs. And on the engineering side, we build cryptocurrencies for a living.
For the investors in the room, and I've met quite a few of you today, and I say, what questions do you want to ask? And so the question is, do investors come to you for advice?
Well, yeah,
due diligence?
Yeah, we have two collections of people that tend to come to us. One are people who are considering investing in something, and actually it's not even normal investors, it's usually VCs or other people who are saying, we want to take a position in a company or in a crowd sale, and then we help them along and we do due diligence. So we look at things like the technical talents of the team, the code, the white paper, these types of things. And the other group of people come to us are those who want to run an ICO, and they ask regulatory questions, structuring questions, marketing questions. And
so this is what I'd like us to drill down deeper, because from the entrepreneurs that I've met today, you are asking the question, should I ICO? When should I do it? Who should I use? What should I use? And the investors, you're asking, should I invest? Should I invest in a fund? When to get in? And is it dangerous? And will I go to prison? And, the usual kind of questions. So I guess that, we've seen a lot of initiatives around the formalization of the process. But there's one thing that inspires people, the common denominator that we've noticed, is that the potential for liquidity is high. Okay, so what does that mean? Richard, maybe this is one to throw to you, and Olga, because you met those investors, and at the time, you didn't know you could offer them this incredible potential. What does it mean, the potential for liquidity?
I mentioned it a little bit earlier, if I can go first, and I'll try to keep it brief, but Olga. I think that we should explore, the potential for, as an investor thinking about returning some of the capital to, our investors. That's something that clearly has got to be on the table for consideration. But putting that to one side, I think this liquidity is extremely dangerous. I think that that we need to remember that the great partnership between venture capital and entrepreneurs, comes from that rapport between the individuals. It comes from actually doing the level of due diligence on the technology side that we were just discussing just now. That's not new. That's how the best due diligence is done. It comes from thinking about how you can get the largest and most enduring possible company out of the whole project. All of those, for me, thinking back to my time as an entrepreneur, were what you're looking for, and frankly have been missing for a long period of time in Europe, tended to be concentrated in Silicon Valley, but now much more prevalent. So I don't think it's kind of like the same old story again, but if anything, it's really the art of great venture capital investing needs to be as finely tuned as possible for this next era, and not to get distracted by the quick riches of early liquidity. I
was encouraged to hear Jamie Burke. I was delighted to see that you got him on a previous panel, because he has spoken previously of enjoying the disruption of his own industry, the venture capital industry, which I kind of like. But then he made that terrific point, which is, smart entrepreneurs don't need to come to us, or to the investors, right? For the money, because it's available anywhere. It's actually the advice that they need to help not to screw it up. Is that still the case? And Olga, what do you think is likely then to happen as the next step, as a result of the freedom that the ICO world has given us? What is likely to be the next step? Will any of that be preserved in the next step?
Yeah, I think, the regulator will move on, and we will have much more, a comfortable environment and be secure, what are we doing and what are the consequences. That's on ICO side, right? But that's, just one use case of that technology, right? And we're going to see a lot of different other use cases for that, right? So it just came up as the first one.
Yeah.
I see a huge opportunities in the space of tokenization of real assets. That's going to be the next huge wave, And we're going to use this one to create more liquidity in all the asset classes that were considered, quite illiquid or, difficult to deal with before, like private equity, like real estate, right? Yeah, it's very, very beginning, right? And this technology enables us issuance and trading in a completely different manner, right? Very efficient, cheap, reliable.
Is that the goal? Is it the efficiency and, if you like, the larger audience that we can address with this? That's the real magic here.
I think it's efficiency and, it's also governance model. Token economy enables us to create new governance models.
Right. Allows us to. It doesn't mean we are doing it yet.
I think we will get there.
I
and
hope
a lot
so.
of brilliant companies and teams, some of them you see here, are on the good way. And this governance model, this is actually what's so interesting about the token economy, right? Is that you can have stakeholders in the system, and they all have their motivation and incentives to move, to create value all together, right?
Right.
And this is very unique system. And we're going to see, I think we will very soon see exchanges, that are governed as, membership clubs, right? Where you just hold a stake.
I mean, I think that is one of the barriers. There are missing components such as robust brokerage services that we desperately need people to develop and invest in and to be able to rely on. It's kind of a bit hit and miss often.
Exactly.
Let's talk about risk briefly, though, Charles, because one of the things that we've been told is exciting is this potential for disintermediating the asset managers. And, where does the control of risk sit if that happens?
Well, okay, so there's a lot of theories about this, but people who really believe in markets believe that markets are ultimately fairly good at managing risk via price
Themselves.
signals. Yes. So there's a caveat to that. You need to have fair, free, transparent, and consistent markets. So when you see most market failures, they usually occur as a result of either bad regulation or as a result of dark pools or other things, or an overuse of certain models that distort certain things. So, disintermediation of institutions doesn't necessarily mean we're going to see a catastrophic increase in risk. What will happen is people will naturally react and build meta layers to compensate, like insurance markets or added due diligence and so forth. And you'll see voluntary regulation occur or restrictions occur. They say just because you could buy something, your pension fund can't because it's not rated, for example.
Right.
It's not necessarily a requirement. So I think it's the wrong question of will it increase risk or not. It's more of a question of are these fair markets? And
that's how the market will judge it, whether they're fair or not.
Exactly.
If they have the tools to measure it.
And I would agree. I mean, I mentioned again earlier, I'm sort of excited by the fact that we can unlock a far greater amount of the world's capital and deploy it on interesting projects. I would agree that the transparency that is inherent in the digital economies that are being built should, and the way they're funded should lead to pretty good markets. And that yes, when there haven't been good markets, that has led to some of the calamities historically. But obviously, speculation can also lead to, shall we say, some uncomfortable experiences in markets. And so, I mean, one of the questions is, what are you mentioned insurance. Is it insurance or is it derivatives, or what is it that can provide the dampening within the flow of capital into different projects that will make this more effective? And I guess that probably does tie into the role of investors as not just as investors and having to go through sophisticated work with the management team in and out of the boardroom, but also as kind of key stakeholders in these digital economies. So there's, this is a complex interplay. You've got open markets with derivative actions and stakeholders in digital economies and boardrooms, all of which we need to work out how they can come together.
But actually,
let me bring up one thing. So
go ahead.
The markets knew that China's shutting down Bitcoin on their end before we knew. You saw the price of Bitcoin go shh. And now all of a sudden we see all these announcements of Chinese exchanges being shut down. Markets are smarter than people. They always are. So never underestimate the power there. Now, with respect to products, it's really good that we now have liquidity, and it's also really good that we now have the ability to trade the risk to other people. And as long as that's not restricted and it's open, in my view, actually we'll see much better risk management than when it exists in silos. Because then you have competitive advantages and regulatory arbitrage and insider trading and all these things that are endemic with traditional markets.
That's cool. Richard, you mentioned about the potential for this technology to augment, to widen the market. But let's put some numbers around that. I mean, how big is, I think you might have mentioned earlier, the size of the alternative investment market out of the total? or Olga?
Well, it depends on what you define as alternative investments, but in the classical, traditional sense, it's everything that is not real estate, not cash, equity or bonds, and currently we have around 7 trillion in that segment, right? 7 trillion. If you compare to what Bitcoin was yesterday,
Yeah.
I don't know today, but yesterday it was around 80 billion, right?
Yeah.
So it's a huge amount of assets, and it's very interesting. And the major trend in alternative assets that we've seen over the recent years is the trend of retailization. Retailization means opening up of certain asset class to retail investors, right? And why? It's obvious,
Safely,
because we
though,
have so
right?
much liquidity, right?
Yeah.
And very low interest rates for so many years now. So obviously, even investors in the lower segment, lower high net worth or affluent, right? They are looking for new opportunities. And this is, this trend that was going on like for the last 10 years now. Now we have also the technology to make that happen, right? The blockchain, the tokenization.
I mean, Richard, can you take a guess of how big it could be?
Well, I mean, I triple checked the other day, and I think we may be at the kind of 10% of financial assets under management now that are really in kind of quote unquote alternative. But I think for me, the real point is that venture is a sliver of that, and actually really good venture that's focused on, what we want to call them moonshots or star shots, the kind of really exciting stuff is like another sliver of that. And that's the stuff that could really move us forward. And it's, there are some really exciting venture capital firms around the world who are combining now this ability to allocate capital like they couldn't before, to build digital economies with advances like whether it be the price of solar or quantum computing or obviously AI and becoming more prevalent. I mean, these are really fundamental shifts. If you allow yourself to get into kind of futurist mode, sort of Ray Kurzweil sort of mode, then you can get seriously excited. I don't think that is this panel. Maybe it's another panel, but and I think that the building of these digital economies, the unlocking of that capital through token sales has got a key part to play in that. I mean, it's about getting to Mars and providing income and education and all sorts of, and solving major problems of genetic disease. I mean, that's what we're talking about in terms of that improved capital allocation.
I mean, that's worth getting excited about, right?
I think so.
They're awesome. So with that note, this panel, by the way, is one of the ones perhaps that is going to be asking or allowing questions to be posed. So if you have a burning question that you want to ask, then we'll get ready to come and ask you the question. So have a quick think, because we're going to leave some time at the end, either for this panel or previous ones, if there's people here that can perhaps contribute to it. So if you have any questions you want to ask, then please raise your hand, and I will try to keep an eye out for you. So there's one in the middle. Now, I don't know if we have a microphone that can rove. So what I would suggest is, when in school they taught you to project, to use your diaphragm? This is it. Go for it. But I will repeat the question. So with the first person with the question, I think is in the middle corridor here, please stand up, say your name, and then go with your question. Okay, microphone.
So I have a mic, so that's perfect. So I'm Alex, and the question is more directed, let's say, the last years where we are, and also how Bitcoin and everything started. So it's a world full of, let's say, free money nowadays and flooding with money because of central banks. And how do you see this going when this cycle is over and we can go back to an average versus previous cycles?
We found the stem cell. So, you have all this organ tissue. You have heart, liver, and lungs, and nerve tissue, right? They all seem different. And assets are the same way. You have cash and commodities and securities and bonds, and right? Tokens are the stem cell. They can turn into anything, and they can move anywhere, and they can do anything. So now that we have that, it's now a question of how do we actually build a sustainable, massive global market for it? And then anybody is on equal footing, which is the pretty magical part of all of it. It also means that everybody's exposed to the same set of risk, as opposed to just accredited investors and special people. So that's the hard part of where we're at.
Yeah. And to add to that point, maybe from my side, when you start any kind of business, it's of course, the first question, how do you scale? How do you scale quickly, right? So I think for this whole tokenization topic, now is the right time. And it's not just, a question of months, it's a question of years. We will still be in this low interest environment for years to go. So if you manage to start this kind of business today and scale it quickly within 2-3 years, then I think you're good when the cycle turns. You will still already own this critical mass. So in terms of the business model, I think that's not the first, the major risk today.
Yes.
So I agree with both of those things. But I just say, to put numbers on it, I mean, yeah, sure, low interest rate environment right now, maybe that means that some family offices are turning around and going, oh gosh, I should try and make some money using, this whole crypto phenomenon. But I hope that the interest rates don't go up to anything near the rates of return that these kind of projects can deliver. Quite aside from kind of making the world a better place, it should be 40, 50% annual rates of return. So I hope the interest rates are nowhere near that. So it shouldn't make that much difference.
Good. Next question over there. We're going to try and plow through a few of these. Please say who you are and then your question. Diaphragm moment. Go for it.
My name's Graham. Is that working? Okay.
Hello,
that's better.
Graham.
Yeah, my name's Graham, and I have a question. Richard, you made a comment about the issues with immediate liquidity, that's happened now with ICOs and the tokenization. I wonder, from my perspective, I see an opportunity to re-examine the processes and assumptions that have gone into the traditional fundraising models for startups. And so I'm wondering what your perspective and what the panel's perspective is on the other side of that equation. The benefits for this new structure and what opportunities we have to maintain the relationship capital, that was existing between venture capitalists and the companies they were working with, or now this this new fundraising model.
Sure. I mean, in brief, don't get me wrong. I think we should be, not that it's down to me or us, that there should be the freedom to experiment as radically as possible. And that's what this is providing. That's one of the beauties of it. I just think we should never underestimate the ability of individual people to be, short-termist, short-sighted, and greedy, and that's going to lead to some, undesirable effects or unintended consequences. And so we just need to be alert to that. And I think absolutely, it's as we said, it's providing a new way of funding, not just the projects we had before, but new projects.
Good. We're going to fire through some more questions because this is doing well. Please, once again, say who you are. Very short question. Go for it. And then one more at the back and then the last one at the front.
Yeah, hi, Craig Burke. I'm just coming back to the question of liquidity again. Where do you see, you could argue, for example, in the broader markets, that the problem is there's a lack of buffers. We saw that in 2008. Where do you see these buffers emerging in the market, in the Bitcoin market, who will come in at particular points of tight liquidity and buy and provide that sort of...
So institutional, do you mean?
Yeah. Or whatever form you see that happening.
Right. Okay, so first off, you have to understand something, that ICOs are not actually new. It's surprising. But look at Tesla, for example. How did they fund the Model S and the Gen 3 and the Gigafactory? Did this come from VCs? No. They issued more stock and sold it to people to raise billions of dollars. So the concept of, I need to raise money, I'll issue an asset, a token, and raise capital, that can come from anybody. It's general public, institutional investors, and so forth. Institutions are really in a rock and a hard place because they live in a paradigm where they make 7% to 10% or whatever, maybe less right now because markets aren't so good. And the crypto market's making an enormous return. Right? We're getting 400x, 500x. You invest in ICO, and if you get 5x, you're complaining about it because, oh man, that guy got a 20x or something like that. So I think right now we're seeing a knee-jerk reaction dragging institutional investors in by hook or crook just to try to get exposure to these markets to get some money. That's all going to dry out. Just like the dot-com boom had the same problem. He'll remember, anybody else will remember the same problem. Where in 98, 99, people are getting 100x. It wasn't real. It's all fake.
But it doesn't mean LPs should not be interested and institutions in this asset class.
Absolutely not. So what needs to happen is they need to be a bit more diversified, better standards need to emerge, and we have to go through a crash. People have to lose money, get a wash, because then what happens is the pets.coms go away, but the Amazons stay.
Yeah,
and
I love
you
that.
actually have standards.
That was Miko's point that in a crash, that's when some of the greatest companies
There
are
will
built.
be blood.
Right.
Exactly.
Exactly.
Sonny, 2 more questions because we have exactly a minute. Would you mind getting both of you to say your questions and then we'll try to answer them really quickly? Go for it.
Hi, my name is Tarek. I spoke to Richard about the same question, but I would like to hear all of your answers, please. Nowadays, with the Chinese news and the regulations and banning, what if you couldn't, as community, get regulated and more countries actually get involved on this banning things and closing and shutting down these exchanges? What is the next step for you as ICOs?
Okay, so what's the next step in the wake of a changing regulatory environment?
Yes.
Pass the microphone back onto the next question. And while we're waiting for the next question, I'll actually just give you the one piece of advice that I always give anybody who asks me. In a market like this, which is a bit like a gold rush, sell them shovels. But now the second question.
So how do you pick the best ICOs, and where will the assets that go behind the future tokens come from? Which is best? Commodities, securities, real estate property. What are the best assets to back tokens?
So that's a tip and a regulatory question. Which one are you going to do?
Two different questions.
Yeah.
Well, since I've been in Bitcoin for a while, maybe I take up this one. So I think, of course, what we hear now from China, this is very, very worrisome, right? And it's not a good news. Yet, will it be a significant breakdown or a significant problem for Bitcoin? I don't think so, right? Because, look, guys, we've seen the same in Russia a couple of years ago, right? In Russia, Putin said that he will throw everybody in the jail for 4 years if you, however, touch Bitcoin, right? And what happened? It became one of the largest volume traders on localbitcoin.com.
So is that what we should expect from...
You can't do anything about it.
We should expect that then from JP Morgan, right?
Well,
Exactly.
we should expect to find out they're already doing that.
Don't be controversial now, will you, Richard? Go for it.
So concerning China, I'm not too worried. I think it's a great opportunity to buy for those who didn't.
And the changing regulatory environment, I mean, you're part of that, and we're all seeing that. Charles, you want a word on that one?
Well, first off, about China, why is anybody surprised that a country that built a giant firewall is upset and scared about free money, especially when they have capital controls? I mean, it's like we expect this to happen, right? Regulatory environment changes. It's frustrating. It sucks. It makes lawyers lots of money and accountants lots of money. But to Olga's point, the genie's out of the bottle, and we're now actually in control of our own money. Again, we found the stem cell, and we can do whatever we want to do with it. And as a consequence of that freedom, we have now a lot more responsibility as individuals, but we also have a lot more financial freedom. So I don't worry too much about regulation. You deal with it when you want to, and you make a personal choice of how badly do you want to sit in a jail cell, and for the most part, it tends to work its way out.
Yeah. Well, just to say, I think we've sort of run out of time, but it was worth going over. Please put your hands together for my fantastic panel and yourselves.